Hello, and welcome back to Bonnie's Life, your home for navigating the exhilarating and sometimes terrifying world of cryptocurrency. I'm your host, Bonnie, and today we're diving deep into the digital trenches to make sense of the current crypto market. Whether you're a seasoned trader with a multi-monitor setup that looks like something out of NASA mission control, or you're just starting to dip your toes into the crypto waters, this episode is for you. We're going to dissect the market from three different perspectives: the short-term trader, the mid-term trader, and the long-term investor. We'll look at the technicals, the fundamentals, and the global events that are shaping the landscape. And of course, we'll talk about strategies to help you navigate these choppy but potentially very profitable waters. So grab your coffee, silence your notifications, and let's get into it. First, let's take a look at the big picture. The entire crypto market is currently sitting at a staggering $4.36 trillion in total market capitalization. That's a number so big, it's hard to even comprehend. To put it in perspective, that's more than the GDP of most countries on Earth. And it's not just a flash in the pan. We've seen a steady 1% increase recently, which in a market of this size is a massive influx of capital. What's really interesting is where this money is coming from. According to the brilliant minds at Glassnode, this isn't just speculative froth. We're seeing structural capital inflows and renewed investor participation. In plain English, the big players are getting serious. We're talking about a whopping $1.19 billion flowing into US spot Bitcoin ETFs and another $176.56 million into Ethereum ETFs. This is institutional money, the kind of capital that doesn't just show up for a quick gamble. It's a vote of confidence in the long-term viability of this asset class. Now, let's talk about the mood of the market. You've probably heard of the Fear and Greed Index. It's essentially a sentiment gauge for the crypto market. Right now, it's flashing a reading of 70, which is firmly in the greed territory. Just a couple of weeks ago, we were hovering in the fear and neutral zones. This shift is significant. It tells us that investor confidence is high and people are feeling bullish. Now, a healthy dose of skepticism is always warranted. Extreme greed can sometimes be a contrarian indicator, a sign that the market is overextended and due for a correction. But in this case, with the strong fundamentals we're seeing, it feels more like the market is finally waking up to the potential that's been brewing for a while. And then there's the elephant in the room, or rather the elephant in Washington, D.C., the ongoing US government shutdown. Now, you might think that political chaos would be bad for markets, and you'd usually be right. But in the wild world of crypto, things are a little different. We're seeing a fascinating trend emerge. Investors are treating Bitcoin as a hedge against political instability and the potential for US dollar weakness. It's the digital gold narrative playing out in real time, with prediction markets giving a 64% chance that this shutdown will last for more than 3 weeks. We could see this trend continue to gather steam. It's a strange world we live in when a government shutdown is a bullish catalyst for a decentralized digital currency. But here we are. And it's not just the US. We're seeing positive signals from around the globe. In Japan, the pro-crypto Prime Minister, Sanai Takaichi, is continuing to foster a favorable environment for digital assets. And back in the US, there are whispers that the government itself might start buying Bitcoin for a strategic reserve. Can you imagine? The US Treasury holding Bitcoin. The implications are mind-boggling. It's a sign that the world is starting to take crypto very, very seriously. So, that's the big picture. A market flush with institutional cash, a bullish sentiment, and a geopolitical landscape that's surprisingly favorable. But what does this all mean for you, the trader? Well, that depends on your style. So, let's break it down, starting with the fast-paced world of the short-term trader. Alright, for all you day traders and scalpers out there, this is where you lean in. Your world moves in minutes and hours, not days and weeks. You're looking for quick profits, and you're not afraid of a little volatility. In fact, you thrive on it. So what's the game plan in this market? First, let's look at the charts. We're talking about the 1 hour, 4 hour, and daily time frames. Bitcoin has had a phenomenal run, rocketing up from $110,000 to over $123,000. Right now, it's taking a bit of a breather, consolidating around that $123,883 level. On the 4-hour chart, we're seeing a slight dip in volume. This could be the market catching its breath before the next big move. Your key level to watch on the downside is $120,000. That's a big round psychological number, and it was a major resistance level on the way up. Now, it should act as support if we see a bounce off that level, especially with a spike in volume. That's a classic long entry signal. If we break below it, the next stop could be the $115,000 support zone. To the upside, the level to watch is the recent high of $126,223. A clean break above that and a successful retest would be a very bullish signal. It would tell us that the buyers are still in control and that we're likely headed for $130,000 and beyond. So those are your key levels: $120,000 as support and $126,223 as a resistance. Trade the breaks and the bounces, but always use a stop loss. In this game, capital preservation is king. Now let's talk about something that's unique to the crypto market: liquidations. In the last 24 hours, we've seen a staggering $269.37 million in liquidations. What does that mean? It means that a lot of traders who were betting on the price going down got wiped out. Their positions were forcibly closed, which added fuel to the fire and pushed the price even higher. This is what's known as a short squeeze. As a short-term trader, you need to be aware of this. High liquidation levels can be a sign that the market is over-leveraged and that a big move is coming. You can use this information to your advantage. If you see a lot of shorts getting liquidated, it might be a good time to go long. But be careful, because the same thing can happen to the longs. Open interest is another key metric to watch. It tells you the total number of open futures contracts in the market. Right now, open interest is high, which is a good sign. It means that new money is coming into the market, but it also means that there's a lot of leverage, which can lead to increased volatility. So keep an eye on open interest. If you see it starting to decline, it could be a sign that the trend is losing steam. So what's the strategy? Here are a couple of potential trade setups. The bullish bounce. Wait for a dip to the $120,000 support level. Look for a bullish candlestick pattern on the 4-hour chart, like a hammer or a bullish engulfing candle. If you see that, and it's confirmed by an increase in volume, that's your entry. Set your stop loss just below the support level and your target at the recent high of $126,223. If we break that, you can trail your stop loss and ride the trend to $130,000. The breakout bonanza. If you're more of a breakout trader, wait for a clean break above $126,500. Don't just jump in on the first move. Wait for the price to come back and retest that level as support. If it holds, that's your entry. Set your stop loss below the breakout level and your target at $130,000 or higher. Now, a word of caution: shorting this market right now is like trying to swim against a tsunami. It's possible, but it's extremely risky. If you are going to short, wait for a clear break of support at $120,000 with significant volume. And even then, be prepared to get out quickly if the market turns against you. Finally, keep an eye on the news. The FOMC minutes are coming out this week. Any hints of a more hawkish stance from the Fed could cause a temporary dip in the market. That could be a great buying opportunity for a short-term trader. And of course, keep an eye on the US government shutdown. If a deal is reached, we could see a sell the news event, where the crypto market sells off as the safe haven narrative weakens. So, stay nimble, stay informed, and happy trading. Alright, let's zoom out a bit and talk to the swing traders. You're not interested in the noise of the hourly charts. You're looking for the bigger moves, the trends that last for days or weeks. You're the surfers of the crypto market and you're looking for the perfect wave to ride. So, what does the ocean look like right now? On the daily and weekly charts, the picture is incredibly bullish. We've just had a massive breakout from a multi-month consolidation pattern. The total crypto market cap has smashed through the $4 trillion resistance level, and it's now acting as a solid floor of support. The next major hurdle is the all-time high of around $5 trillion. If we can break that, we're in uncharted territory and the sky is the limit. For Bitcoin, the key level to watch is $130,000. A weekly close above that level would be a massive confirmation of the bull trend. It would open the door to a sustained rally towards $140,000, $150,000, and beyond. The RSI on the daily chart is a bit on the high side, which suggests that we might see a bit of a pullback or some sideways consolidation in the short term. But that's actually a good thing. A market that goes straight up is a market that's destined to crash. A healthy bull market has periods of consolidation. It's like climbing a mountain. You need to stop and rest at base camps along the way. Now, let's talk about the fundamentals, because for a swing trader, the fundamentals are just as important as the technicals. The most exciting development right now is the explosion in the Bitcoin options market. We're talking about nearly $80 billion in open interest. That's a huge number, and it's a sign that the big institutional players are getting serious about crypto. They're not just buying spot, they're using sophisticated financial instruments to gain exposure and manage their risk. This is a sign of a maturing market, and it's incredibly bullish for the long term. And then there's the big one, the SEC's decisions on 16 cryptocurrency ETFs that are due this month. This is a major catalyst. If we see a wave of approvals, it will open the floodgates for a torrent of new capital to flow into the market. We're talking about billions, if not trillions of dollars. It would be the biggest green light the crypto market has ever seen. Of course, there's always the risk of delays or rejections, which could cause a temporary dip. But even a dip would likely be a buying opportunity for those with a mid-term perspective. So, what's the strategy for a swing trader in this environment? Here are a couple of ideas. Buy the dip. A pullback to the $115,000 to $120,000 support zone for Bitcoin would be a gift from the crypto gods. That's your chance to load up. Look for a confirmation of support on the daily chart, like a bullish reversal pattern. Before you jump in, this is a high probability entry for a swing trade with a great risk to reward ratio. The breakout and retest. If you miss the dip, don't worry. Another great entry is to wait for a confirmed breakout above the $130,000 resistance level. Don't chase the breakout. Wait for the price to come back and retest that level as support. If it holds, that's your entry. This is a more conservative approach, but it can help you avoid getting caught in a fake out. When it comes to taking profits, it's important to have a plan. In a strong bull market, you want to let your winners run, but you also want to lock in some gains along the way. A good strategy is to take partial profits at key resistance levels, like $140,000 and $150,000. You can also use a trailing stop loss to protect your profits while still giving the trade room to breathe. For example, you could set a trailing stop loss of 10% or 15%. That way, if the market turns, you'll automatically sell and lock in your gains. Your key action as a swing trader is to stay on top of the news, especially the ETF news. A surprise approval could send the market parabolic. A surprise rejection could cause a sharp correction. You need to be prepared for both scenarios. Also, keep an eye on the institutional fund flows. The more money that flows into the spot ETFs, the more confident you can be in the bull trend. Now, let's zoom out even further and talk to the long-term investors. You're the hodlers, the true believers. You're not concerned with the daily or weekly fluctuations. You're in this for the long haul. You're planting a tree, not a flower. So, what's the long-term outlook for crypto? In a word, phenomenal. The long-term investment thesis for Bitcoin is stronger than it's ever been. The digital gold narrative is no longer a fringe idea. It's a mainstream conversation. We're living in a world of unprecedented monetary printing, and people are looking for a way to protect their wealth. Bitcoin, with its fixed supply of 21 million coins, is the perfect solution. It's a lifeboat in a sea of inflation. The current macro environment is a perfect storm for Bitcoin. A prolonged US government shutdown, a dovish Federal Reserve, and increasing geopolitical instability are all driving investors towards safe haven assets. And while gold is the traditional choice, Bitcoin is increasingly being seen as a more modern, more efficient alternative. It's gold 2.0. The institutional adoption we're seeing is not just a temporary trend. It's a seismic shift. When the biggest financial institutions in the world start offering Bitcoin to their clients, you know that something fundamental has changed. The ETF approvals are just the beginning. We're going to see more and more regulated, easy-to-use products that will make it simple for everyday people to invest in crypto. This is how you get to mass adoption. And let's not forget the potential for governments to get involved. The idea of a US strategic Bitcoin reserve is no longer a pipe dream. If that happens, it will be a game changer. It will legitimize Bitcoin on a global scale and send a powerful signal to other countries that they need to get on board. The game theory of Bitcoin is fascinating. As more individuals, corporations, and governments start to adopt it, the network effect becomes stronger and stronger. It's a virtuous cycle that could lead to an exponential increase in value. So, what's the strategy for a long-term investor? It's simple, but it's not easy. It's all about accumulation and conviction. The accumulation game. Your goal as a long-term investor is to accumulate as much Bitcoin as you can at the best possible prices. The best way to do this is through dollar cost averaging. That means investing a fixed amount of money at regular intervals, regardless of the price. This takes the emotion out of investing and ensures that you're buying more when the price is low and less when the price is high. Any significant market correction, any dip of 20%, 30%, or even 40% should be seen as a massive buying opportunity. These are the moments when fortunes are made. The price is what you pay. Value is what you get. Don't get too caught up in the short-term price targets. As a long-term investor, you're focused on the value of the network, not the price on any given day. That being said, it's always fun to speculate. Many analysts are calling for Bitcoin to reach $200,000 to $250,000 in the next 12 to 18 months. Some of the more bullish long-term targets are in the $500,000 to $1 million range. Are these targets realistic? Only time will tell. But given the powerful fundamentals at play, they're certainly not out of the question. The power of conviction. The most important thing for a long-term investor is to have conviction. There will be times when the market is down, when the FUD is at an all-time high, and when everyone is telling you that Bitcoin is dead. These are the moments that will test your resolve. But if you've done your research, if you understand the technology, and if you believe in the long-term vision, you'll be able to weather the storms. The key is to HODL on for dear life and to not let the short-term noise shake you out of your position. So, we've covered a lot of ground today. We've looked at the market from 3 different perspectives, and we've talked about strategies for each type of trader. To make things even easier for you, I've put together a little cheat sheet. You can think of it as your trading plan on a napkin. For the short-term trader, you're a hawk, watching the 1-hour and 4-hour charts. You're looking for volume, liquidations, and immediate news flow. Your entry triggers are bounces off support at $120,000 or breakouts above resistance at $126,500. You're taking profits at $130,000 and using tight stop losses. Your key action is to monitor the FOMC minutes and the government shutdown news. For the mid-term trader, you're a surfer, riding the waves on the daily and weekly charts. You're looking at the total market cap, open interest, and geopolitical events. Your entry triggers are dips to the $115,000 to $120,000 support zone or breakouts above $130,000. You're taking partial profits at $140,000 and $150,000 and using a trailing stop loss. Your key action is to watch the ETF approval news and track the institutional fund flows. For the long-term investor, you're a farmer, planting seeds for the future on the weekly and monthly charts. You're looking at the total market cap, global events, and fundamental adoption. Your strategy is to accumulate on dips and use dollar cost averaging. Your price targets are in the hundreds of thousands of dollars, and your key action is to hold with conviction and ignore the short-term noise. And that's a wrap for this episode of Bonnie's Life. I hope you found this analysis helpful, and I hope it gives you a clearer picture of how to approach the crypto market, no matter what your trading style is. Remember, the key to success in this market is to have a plan, to manage your risk, and to stay informed. It's a wild ride, but it's also an incredible opportunity. If you enjoyed this episode, please do me a favor and hit that like button, subscribe to the channel, and ring that notification bell so you don't miss our next deep dive. And I want to hear from you. What are your thoughts on the market? What are your trading strategies? Let me know in the comments below. I read every single one. Until next time, trade smart, stay safe, and may the crypto gods be with you.